We closed at the high of the session today. The Dow ended up 102 points. Listen, I know that these huge moves up or down 400 points, those are the things that make headlines. But when you're really watching the market as a profession, it's those subtle things, those subtle directional shifts. I tell you what we saw in the last 2 days, I think probably has a positive meaning. Now, the market down a lot during the pre-session, a lot during the session, and then coming back like today without any sort of news is a sign in my mind that smart money has been accumulating. So on the surface, it seems innocent enough, not a real big day. But a few days will go by, and then all of a sudden you have a real big session, real big news, and then that's when the masses jump on board. Of course, next week we got the Federal Reserve meeting. Joining me now, Jim Awalt, Plimsoll Mark Capital Managing Director, Hillary Kramer, A&G Capital President and CIO, and Lee Munson, Portfolio Wealth Advisors President and CIO. Lee, let me start with you. You know, I watched the market yesterday get talked down pre-open by one of these pharaohs of Wall Street, come all the way back. I watched the market today, and listen, it wasn't a fantastic session, but we surged into the close ahead of a weekend of a lot of uncertainty. Back-to-back sessions when we could have been down easily 200 points each, and we weren't. What does it say to you?
Well, it tells me, first of all, for our clients, you had your chance to rebalance back on August 24th, August 25th, and now we're just working through this volatility. I love to see those rallies into the close because when you really think about it, the viewers need to understand as people start during the day putting in their mutual fund tickets to buy during the day, those mutual fund managers know that, and they know they have to get cash to work. So I think it's very encouraging as we come up to next week's, bogus chaos about the Fed raising or not raising, that there's actual people who want to step in and buy that market. I think it's great for a pop, and I think we could see a rally into the end of the year. That's when you kind of have to think about taking profits.
Yeah, but now we're putting the cart before the horse because right now, a lot of people are wondering what the hell to do with the losses they've got mounting up. Jim, it's been a long since I've seen you, buddy. How you been?
Pleasure to see you.
You too, you too. What do you make of this?
Yeah, I think that, first of all, people are back to work. You're getting more human trading now.
When you say people, you mean the big wigs like you, right? Well, you guys have been gone for a month. You've been in the Hamptons. Yeah, now you're back.
Well, that's true. But anyway, I think over the summer you had a lot of the computerized trading and the programs taking the market up and down where they accentuate the volatility. Look, you have three issues now. You have the Fed, you have earnings, and you have China. I think the Fed and earnings are both going to be fine, which should allow the market to go up if it doesn't get derailed by China. The risk is the wheels come off there, the whole China complex, commodities, oil collapse, and we get back to all the worries about August.
To that point, Jim, late last week, the narrative became, even though it's not official, of course, that at some point very soon China will announce a major stimulus plan. You think that's got to come through fairly quickly to keep this rally going?
I think what has to happen more than they're doing a big stimulus plan is that you don't get bad news from here. If they just continue growing at 4 or 5%, or whatever the real number is, it would be nice if they did another stimulus, but they've done so many of them. I think any impact would be short-lived economically and in the markets. What you just need to have is China go to a sustainable growth rate that the world can identify and not continue to decelerate, pulling down all the other emerging market economies.
Hillary, Lee mentioned August 24th. That was the moment to rebalance. I'm not sure enough people were that nimble. Is it too late to start rebalancing or start to, pick up some positions here? A lot of things are still down a lot.
Oh, absolutely. There's still opportunity. The Dow, S&P, are still down high single digits on the year. And yet, I do agree with Lee. I think we're going to be much stronger going into the end of the year. This is an opportunity. Many investors might want to wait and tiptoe until we see the September 15th, September 16th Fed decision. But I see opportunity here.
Why is that important to you?
Because if the Fed, even though I don't think the Fed will tighten, even 25 basis points, if the Fed goes ahead and does this, I think it could cause some havoc in the market short term, and that becomes a buying opportunity. It's just the natural response because tightening means the dollar gets stronger. And it points to...
Well, there's also a sort of herd mentality, right, Lee? I will say, though, the last 3 times the Fed tightened, the next 3 months, on average, the market was down 4%. So that's that tough go period, if you will. I don't know that we'll necessarily follow the script, but there's got to be some knee-jerk selling. I, for one, would welcome it. I think it would be a huge buying opportunity. I know you don't like this Fed thing. I know you think it's pomp and circumstances, but it is real. It does come next week, and there will be a major reaction to it. How should we handicap it? Lee?
I think I've taken this very contrarian viewpoint that if we go in and we see the Fed raise rates, I think a lot of us are going to be so happy that they acknowledged that this is just a ceremonial rate hike and that they're willing to do it. We might, even though we might have a day down, I think the market's going to rally. And I think for different reasons than you and I, Charlie, have been watching markets for years. We know when Fed hikes rates, the market's not great. I think this is one of the times where it's going to buck the trend. I would buy the dip if we see it, but I would be prepared to see the market rally on a rate hike.
Right. See it rip. Jim, you were
Yeah,
shaking
I
your
absolutely
head.
agree. I think it would have people would say the Fed thinks the economy's okay, otherwise they wouldn't have done that, which would become a self-fulfilling prophecy.
So this morning, Goldman comes out with this real big report, and ultimately, here's the gist of it. They say oil could go down as much as $20 a barrel because there's a huge glut around the world. They of course, remember at one time, it was 2008, they said oil rather is going to go to $200 a barrel right around 2015-16. That didn't quite happen. Joining me now, Jim Awad is back, as well as Lee Munson. And you remember that big $200 barrel oil call, Jim? What do you make now? I mean, I don't know.
Well, the $20 sounds a little dramatic, but look, the price.
But even $40 would be a trough for West, which is what we use.
I'll tell you the critical variable here. We know oil shouldn't be going up because the Saudis have said they're not going to engage in any sort of a plan to restrict production. And we know that if prices do go up, American producers with their new efficient shale will immediately turn on supply. So there's a cap on oil. The question is it going to get down? And the real question there, it's the whole China complex again. We know what Europe is. It's 0 to 1%. We know what the United States is. It's 2 to 3%. And we know that you're in recession in Russia and recession in Brazil. So we sort of know all the other pieces of the world. The question is, do the wheels come off China and pull the world economies down? If they do, then oil could go to 20.
No, but here's the thing, Lynn. I don't like that whole efficient market theory. And certainly I don't think it worked with oil. I mean, it's over $100 and then it goes to 30, and now it's going to go from 40 to 30, 20. Why would it be so dramatic? Why would we have so much more weakness in oil? I mean, there's still demand for it around the world.
Well, there is. And first of all, I don't know where the heck they come up with these stupid numbers. Okay, number one. Bloomberg reported a couple weeks ago, they talked about how the actual physical delivery in China is actually pretty robust and doesn't look that bad. The financial markets, yeah, that's a problem. Number two, we've got so many barrels of oil that are going to come off the hedge from Mexico at the end of this year. And that's this big overhang that's causing that supply problem. I think the third thing you have to remember, as of this summer, we can no longer give the soundbite, which I've been loving, to say it's oversupply and we're fracking too much. That's no longer the case because there's a lot of wells that have been dug that are not going to be producing. So I think people have to remember the financial asset part of it is very different from the physical delivery. And don't forget about more esoteric stuff that I love to get in the weeds on, like the Mexican hedges that are going to be up in a few months.
Here's the thing, Jim. Speaking of the fracking thing, we've taken a lot of rigs offline. I think we're up to we're in the 600s, 40, something like that, down over 900 rigs. And in this fracking, it really sucks up the oil a lot faster than before. So even the fracking that is still producing, we're sucking that stuff out of the ground so quickly. To Lee's point, at some point, the supply-demand, the dynamics could shift dramatically to not enough supply.
Yeah, well, everything that I have read indicates that these, while they don't last a long time, they're very efficient and very low cost, and a lot has been pulled back and could come out again if prices went up. And I also think that we're very early in the revolution here, that as the technology improves, I think we'll find more, particularly if the price does go up some. So I'm bullish on America's ability to produce oil.
So do you agree, mostly, though? It sounds like you mostly agree with the potential to go much lower in oil.
Well, I think the odds are it'll go lower rather than higher. Goldman sounds a little dramatic with the price.
What do you think, Lee?
No, I don't think so. About half our clientele out here are in the gas and oil business. That's why I'm in the Southwest. It's great money here. And I think you have to remember that Saudi Arabia is right now losing money playing this game of chicken, but the United Arab Emirates and some of these other places that can be profitable at say 25, 30 a barrel, they're not willing to go that low, and they're not all in cahoots like we presume just because they're geographically located.
Right.
I think that we underestimate how much pain Saudi Arabia can go to. Plus, they're fighting a war. They're spending billions trying to keep their masses, sucking off of the mother's milk of handouts out there. It's a big welfare state.
Right.
Don't think Saudi Arabia can be punished like that.
Well, you both are fantastic. Lee, I'm leaning more with you than my old friend Jim. Thanks a lot. Both have a great weekend.
Okay.
Hey, we've got breaking news for you. Amazing. Unseeded Roberta Vinci pulls off the unthinkable, upsetting Serena Williams in 3 sets. It was dramatic, and it was heartbreaking.